Much on Qantas, struggling after that downgrade.
Qantas in focus today, a shocking day, down 16%. And actually trading at all-time lows. It traded as low as $1.16 this morning. And this is really on the back of this profit downgrade, which could be up to 90%. They had profits of $550 million last year. They've announced that profits could come in anywhere from $50 to $100 million. Now, this is a massive downgrade. I mean, analysts were expecting the profits to fall from last year's figure, but I think consensus was around $300 million. So this is a huge downgrade. And really, I think the share price being supported by the fact that it is now at its lowest levels ever. And this is really being driven by the international business. Its loss of around $216 million last year is expected to more than double this year. And Qantas has said it is that rising jet prices as well as the economic turmoil in Europe, which is affecting international travel markets, is really, and a high dollar as well, really affecting that international business. International business for Qantas is very difficult. They've got high competition and they're up against airlines that do have significantly lower labour costs than Qantas, and also a lot of them are backed by government and receive significant government subsidies. So in that respect, it's a very difficult landscape for Qantas to operate in. On the other hand, we look at some positives for Qantas. I mean, this industrial relations difficulties they've been seeing recently, they appear to be starting to stabilise. They're certainly looking to rationalise and some of their engineering operations, and certainly they're looking at swapping around and changing some of their networks to improve profitability. On the other hand, Virgin actually performing quite well, up over 2% today after announcement Etihad has increased its stake in 4% for Virgin Australia, and that's to move to strengthen their alliance with Virgin. And Middle Eastern airlines are among the biggest growing in the world at the moment, the fastest growing, and that's really partly because they are backed by that oil wealth. But it is just further signs that some of these Middle Eastern airlines are pushing out globally and into Australia as well.
Yeah, Tim, not really the kind of market, I suppose, that any company wants to be delivering bad news, but I suppose the one upshot for Qantas is they did it on a day where we are seeing a bit of support on the market.
That's right. It could have been worse if it was a down day, but certainly the Australian market putting in a solid bounce today, up over 1%. And we're back up above that 4,000 level for the ASX 200 on expectations of rate cuts this afternoon from the RBA. And it has been those sectors that have been hit particularly hard recently, which have bounced back the hardest, including energy and materials today. But I think volumes remain pretty average, and it just shows investor uncertainty at the moment. I mean, we're back at that 4,000 level. Are we going to see support from here? Are we going to start seeing some of the fund managers move back in and start buying now, or are we actually going to see further drops on the market? Now, if we look at the last couple of years, the second quarter period of the year from around April through sort of June, July, there has been a bit of a significant trend developing during these periods over the last few years. If we have a look at a chart over the past 3 years of the Australian market, during this period we've seen three significant falls. In 2010, we saw the ASX 200 pull back by 15%. Then over the same period in 2011, we saw it pull back 16%, and it actually went on to fall even further from those April highs to around 22% through August, October, when Europe really came into focus. But at the moment on the Australian market, what we're seeing is we've seen drops through April and May of around 9 to 10% now. And the worrying thing, I think, for the market at the moment is over the past 2 years where we have seen those significant drops, the market has dropped around 10%. It's then sort of consolidated or had a bit of a bounce, but then fallen another 5%. So at the moment we're at that down by about 10% level. We're seeing a little bit of support on the market. Could see a little bit of a bounce, but it probably will be short-lived, and there may well be another drop of 5% to come going by those past 2 years, and that could put us back down around that 3,800 level by the end of June possibly. And there are certainly the downside risks out there which could push the sell button for investors.